So now let's get to that development aspect.
Now, economic growth is just one side of the game, as I said. Well before maybe the 80s, the world used to look at growth, development of economies using economic growth indices. Then if you had sustained increase in your output, growth in the economy will be said to be developed. But after a while, it was noticed that some countries that were actually growing, in terms of, output year on year, we are still having their people living in poverty, lacking health facilities and all of that. So the concept of economic development came in, where it's known, it was now proven that growing your economy in terms of output was not enough to drive development. There must be conscious effort by policymakers. There must be real leadership and institutional framework that must convert that growth into development. You need people, you need institutions, you need a framework, a very decent environment, a very safe and secure and honest and not corrupt environment that will ensure that growth, advances into development. That infrastructure is available for people to enjoy, that when people want to go to school, the schools are there, the facilities are up to standard, the health facilities are there, the roads, the railways. People have to make sure those things happen. Because growth can be happening because, goods are being produced or prices are even going up. But how well have people's lives, been made to improve? And even if we say we have freedom of expression, we have enjoyed freedom in the past 15 years. If you are free, but you are hungry, and the roads you move on are, death traps, are you truly free? So freedom, mixed with poverty and death traps, around you is really no freedom.
Now, Mr. Udemezwe, conscious efforts, you said, have to actually be put in to ensure that we see development. Now,
yes.
in terms of putting that conscious efforts to help convert growth into development,
yes.
How has the financial services sector actually fared? Has it contributed as much as it should have to ensure this development and growth that we're looking for?
Yeah, the financial services sector cannot just be a contributor. It is the catalyst. The financial sector is the key catalyst, the main driver of growth and, in fact, development, because they facilitate the mobilization of capital and then pushing those capital into the required sectors to drive development. For us in Nigeria, it's been a checkered history of boom and bust. Thanks to Professor Soludo, the banks in Nigeria became more robust in terms of capital adequacy, post the constitution era of 2005. Okay, so from 89 banks that were poorly capitalized, that whose combined share capital shareholders fund, could not match up to the fourth largest bank in South Africa as at 2005. After we did that consolidation, we became much bigger and more robust in terms of the size of the financial market. Most banks now had, a shareholders fund above 50, 100 billion naira, and all that summed up to some quantum of capital available to develop the economy. So, but unfortunately, because of some governance issues, business ethic issues, morality issues, and then of course some skills and expertise gaps, most of the banks, were not able to manage their risks. Of course, the most important risk in the banking system is the credit risk.
True.
There were a lot of concentrations of risk in the oil and gas sector. There were lots of margin lending because, Nigerians like a lot of hype. You bring 20 naira today, it becomes 50 naira the next day in the stock market without understanding the fundamentals of investing in the stock market. So all that combined with other factors, made us take a lot of haircut or a very heavy shave, post global financial crisis.
That was in 2008.
So that drew us back. Otherwise, the financial sector was already geared, to boost the economy of the nation, because banks were actually looking for who to lend to. But because we were still shy of lending to the agricultural sector, we could still not find important infrastructure deals to finance. We couldn't do manufacturing because of the risk they faced with high energy costs. We were pushing the money into the easy way, funding margin lending, the oil and gas, which is still, the thing holding us down to today. And then all that led to some bust in the financial sector. So banks suffered some kind of, slowdown. Even though with the way the CBN managed that crisis, somehow the industry is getting stronger, coming back on its feet. Even though a mixture of policies coming up now is also constraining lending. So the financial sector is well positioned now, more than before, in terms of size, in terms of capital adequacy, in terms of even governance, because a lot of governance framework has been put in place to ensure that the right hands, the right behavior, the right attitudes are found in the financial sector.
Okay, what about the capital market?
The capital market, I would say, has been doing very well.
In the last 15 years?
In the last 15 years, save for the financial, global financial crisis, which affected, of course, every nation. But if you look at the way we have been building that market, deepening it, it's been getting better. But it still can get a lot better because we have a lot of big companies in this country that are still not present in that market.
And well, we're beginning to see more of those companies, such companies listed in the
We need to drag them in. The MTNs of this world, the Airtels of this world, the Glo, the mobile producing, all those big IOCs, all the big companies in the telecoms industry, all the other foreign companies that have shied away from the market because maybe they don't want the activities to be let bare in the market. The SEC should do something about it. We can use moral suasion and put some little, I don't want to use force here, but we can find a way to mandate them. Let me use that word, mandate them to play in our market. It's not fair to be making a lot of huge amounts of money in our economy without trying to be part of our market. So, you don't want to be part of the market where you buy and sell and you make a lot of money. So
that brings into play what the regulators should be doing. Let's talk about the regulators, how they've actually fared in the last 15 years of democratic rule.
In the financial system, we have three key regulators, so to speak. The central bank being the apex regulatory body in the money market, while the Securities and Exchange Commission being the apex regulatory body in the capital market. And of course the NDIC. That ensures the funds. For CBN, I think the regulation has been better in terms of monitoring of banks, reporting of banking activities, fraud issues and all of that. They have not been doing badly, even though we keep saying they can do a lot better. So that banks' balance sheet will be seen for what it is. Transparency in the banking hall will be much better, and skills development will also occur at the same time. In the microfinance sector, that's where I think they still have to do a lot of work, because in this economy, there's heavy dearth or scarcity of microfinance, at the grassroots level. And of course, venture capital is non-existent. There's no venture capital in this economy. People have great ideas, but they cannot actualize them because nobody can give you the fund. The government is pushing that to the banks. The banks are pushing it back to the government. So who will bail the cat? At the capital market sector, the SEC has been doing well, but they need to do a lot more. We cannot have a single, trade point in this. The Lagos Stock Exchange, of course, the Nigeria Stock Exchange as the only, trading point in Nigeria. We should create more markets, more stock markets in Nigeria, and we should bring about, better governance in terms of monitoring what stock brokers do and the capacity to play in the market.
What about the NDIC?
The NDIC, their role has been, that of the undertaker, more or less, in the past years. We need to see them doing more proactive monitoring of banks, not just to wait when the banks die. We now look at how much can we pay the depositors. We must also get involved with CBN, to make sure that we look at the life, the operating standards in those banks while they are alive. Not just to collect our 15 over 16 of 1%, the premium that's paid at the end of the year. But while we collect that check, we also checking to see, the balance of that fund, how, is it managed? What are the practices, that exist in this bank to ensure that they don't die? Because an insurance company that insures your car also needs to be sure that you're doing the right thing, you're maintaining your car properly. You're not exposing it to unnecessary risk. You don't give your car to unlicensed people to drive and all of that, to make sure that risk does not crystallize.
Now, looking at collaborations, we've had a couple of them in the last 15 years. Private sector, public sector collaborations. Some have worked, some have not worked. How, going forward, can we expect to see, because of course right now everybody has begun to agree that it is the private sector that will drive the economy. And of course we heard a lot of that being talked about at the World Economic Forum on Africa meeting just ended. There was a lot of talk about how the private sector should drive development, and we've seen that in the last couple of 15 years. But how would you rate it? On the percentage level of 100, how would you score it?
We have done only about 15% of 100. That 15 because, and maybe I'm being magnanimous.
I don't know. Let's be objective and realistic here. 15% seems a little too low.
Too low. Let me tell you why I score it 15%. Because we ought to have done a lot much more. Compared to what opportunities we have to do public-private partnership in this country, we haven't done much. Because we have a public sector that's withholding that partnership. we have a private sector that is not well empowered financially to engineer the process. Even though we have opportunity of, because we have a better rating now as a nation, we have opportunity of sourcing for long-term financing from outside the shores of Nigeria. But what have we done to deepen that process? We have only got 2 projects that worked. Like I said before here, we have the MM2, the airport that's done by Courtney, and of course the Lekki concession, which is also controversial. The Lagos State partnership, with the LCC for the Lekki Express Way. That is still controversial because the Lagos State government has tried to withdraw that agreement, to convert it to a public project. So these 2 have actually shown that we can collaborate and do a lot better. But how much are we promoting that collaboration? So looking at what we can achieve, the River Niger dredging, the second Niger bridge, the rail line, Lagos to Kano and around the whole country, the aviation sector, government is trying to do the most they can, but it's getting too slow. Let me tell you, Harriet, everybody agrees that if only Africa can fix their infrastructure, it will become a major contending force in the Community of Nations. But we are getting too slow. Looking at the level of, how do I put it, the backwardness or that's deprivation we've suffered in the past years, we need to redouble our effort to be able to get to where we should be. So it's not business as usual. It's not PPP, as a normal course of activity the way it should be. We should make it very fast. We should be in a hurry to do these things, to drive development. So for me, we haven't done well there at all.
In a hurry. And of course, it's a pre-election year. Next year's elections.
Everybody's is on election. So we're abandoned leadership. We're doing a lot of politics. If you look at the past 15 years, you'll agree with me, Harriet, that out of those 15 years, we've done more than half of that in politicking. So you find that well ahead of every election, 2003, 2007, 2011, now 2015, people start politicking way too early. The president of the country is distracted. National Assembly people are distracted. The governors are forming their own group to see how they can, do a second tenure. So all of that has, distracted from governance, proper governance in this country. And the little years that are left, we're trying to settle down from new government and all of that, and then not much is done. So we need to see people who are focused on leadership, not on politics. And when we play the politics, we must play it maturely and wisely, not for self-aggrandizement and personal enrichment.
Okay, so now with all your analysis from the beginning of this conversation, I like to do a percentage score. On a percentage level, in the last 15 years of uninterrupted democratic rule, how many percent will you score Nigeria's economy? Let's be objective. No, you don't.
A little trap for me.
No, I
Nigeria, one, I would just say there are a few positives. It's not all negative. I'm a bit concerned that at the rate we are going to miss it. We have kept giving ourselves different goals. Year 2000 was a milestone, that light for everybody, health for everybody. We moved there to 2020. We've now said Vision 2020 to be the 20. Fine, we're getting close. Thanks to rebasing, we're now the 26th largest economy in the world. But in terms of the human development indices, how well are we doing? How much of our people are dying every day out of lack of care? How much people are unemployed who ought to be employed, doing something useful for the economy? How many people are in school and are not dropping out? How many people can tap into the opportunities that are in this economy fully as they ought? Looking at that, if I score Nigeria based on economic growth alone, we've done fantastically well. You can say, you can give us an A, 75%. But in terms of economic development, human development indices, we are way, I think, below 40%, which is an F. If I'm a WAEC examiner scoring Nigeria on a lighter note, I would not give Nigeria a pass mark in economic development indices. But in economic growth, we have done fantastically well. But we need strong, selfless leadership, not just at the highest level. When we look at leadership, people are looking at President Jonathan. The man cannot kill himself for us. Yet, he has to lead and provide a guide. But each and every one of us has a role to play. Whether you are in the family level or in the church or in the community, what are you doing to make the society better than you met it? What are you doing to improve the lives of people around you? What are you doing to make sure that we reduce poverty in this country? If you build a mansion around yourself, you live in a fortress, but living around you are all, unemployed young people, people who are angry and hungry every day, you cannot be free. kidnapping, will come. Crime of all types, armed robbery will be around you. And we cannot, whether we are pastors or bishops, whatever we are, or ministers or commissioners, as long as we don't improve our environment, we will all be partakers in the dangers of that neglect and deprivation.
Mr.
Thank you.
Udemezwe, thank you so much for coming on the program this morning. It's been an interesting
Thank you,
conversation.
We can't exhaust Nigerian discussion.
No, we cannot.
But we'll keep doing our best.
I know we'll still have this conversation again.
Yeah, sure.
But thank you so much for coming on the program.
Thank you.
I've been speaking with a financial management consultant, Mr. Oji Udemezwe, and we've been taking a look at Nigeria's economy in the last 15 years of democratic rule. It's been an interesting conversation. Thank you also for being a part of it. And thank you also, Angels God, for sending in your tweet. I couldn't read it at the moment, but thank you for sending it in. Well, that's the program for today. Thank you so much for being a part of it. I'm Harriet Agbini.